Crypto Sniper coming at you. Yes, it is he, Francis Hunt. Going to talk to you about, wait for it, Bitcoin, BTC, USD. That's right. Let's talk about it. So here's our history. We've got it here. I'm looking at the stamped version. I've got a deeply annotated chart that's almost too messy on Binance, so we're going to kick off with here. I wanted to show also, as part of your learning, what the history was getting to this point and why we say you are in a reversal environment for Bitcoin. There's still quite a few people that are bears. I think Soloway is one, Gareth, and a number of others that say it's bearish. However, it's important to differentiate between a reversal and a runaway bull market. This is not a runaway bull market. It is a reversal out of a painful extended bear market that is consistently and steadily making moderate progress in between periods of dollar strength as well, and lots of other market aspects that are ongoing, such as risk on, risk off. We had a bit of frights on the debt markets, frights on dollar, bit of a run-in debt ceiling, yada yada. There's a lot of things that are creating minor news flow for which Bitcoin is gestating around. It is not a dominant bull that it doesn't give a hell what the news is, it's just going up. That part may well come in due course, but what do we see for the short and medium term? Also in this video, we're going to do an update on Ethereum, that's right, and why we feel it's going to outperform Bitcoin, that's right. And we're going to talk about XRP, the XRP USD, and why actually XRP for us remains, as a reminder, a 33x. Plus, I'm going to tease you. You're not going to get your answer. I'm going to tease you with a particular token that is still well within the top 20 that will outperform all three, and in our opinion, in the next major bull market, do a 60x, 60x. That's right. We're going to tell you about it, but we ain't going to show you who it is. So in fact, if you want to find out where it is, we have our live trading day where we will no doubt be touching on it. That'll be coming this Friday on the non-farm payrolls number. So you can join us for the non-farm payrolls number coming in, which is our live trading day. Traditional markets, an hour and a half, half an hour break, and then an hour and a half of crypto markets, full assessment with recording for a full month, access to that recording. And of course, if you take, you buy two for the price of three, you're going to have 3 months of access and 3 separate months of check-in as these things progress through our non-farm live trading day, non-farm payrolls, data release moments. Okay, so let's get into what's gone on with Bitcoin and our take so far. A small back step. So I want to highlight that most people, there's very few people that talk about most of these things, but we are continuation traders. We are continuation traders by definition. HVF method, Hunt Volatility Fundamental Method, is very much focused on continuation. However, by being deep-seeking, truth-seeking, technical analysts that look at key levels of significance, one of the things I'm going to be talking quite a bit about is actually reversal patterns, because through our desire to become super price behavior specialists and futurists on an on-balance or probability basis, we have become very proficient at reversal patterns, so we know when we're not going to get continuation. So part of understanding continuation is also understanding when you're getting all the signs of non-continuation. And we're going to do a quick recap on Head and Shoulders and all the key levels of significance thrown down, not for historical purposes, because as you learn more about your history, you understand more about the slavery you're currently in. Go and study the history of mankind and get to the truth, not just the MSM version of it. And the more you become skeptical about the direction you've been taken in by your priestly classes and slave masters in these times, look back to understand the way forward a whole bunch more. And we're going to be showing you why those levels are super key to our current, and then we'll be dropping down where we are and what we expect next on Bitcoin. Bitcoin dominance, F dominance, FBTC, and into XRP dominance. So let's get straight on to the job of hitting the chart. Bang. Okay, so here she blows. Now, a number of people will not understand that we have multiple heads and shoulders occurrences that occurred. The very first was the beautiful exit, let me just say, on this particular one from our first cup gold nugget. What is the first cup gold nugget? It was the fact that we broke really quickly. We didn't have much of a 3-dip down. We had the mega up of 1718 being our primary high with the 3,200, the mega low. You then had the secondary high that took you just sub 14K. Then you got the events of March 2020, let's rather just say it, that actually saw you hit 4K and in some instances trade a tick below. So a really deep draw on the events of March 2020 that saw you then rally up to the 8 or 9, 10K area. And the question was, are we going to get a proper third down leg? Or, because of the extremity of the events brought about by March 2020, will you have a rather abrupted down leg? And instead of us having to guess 2 or 3 times of the 5 cups where the gold nugget is, we guess the first time and there's the gold nugget and it goes early, it shoots. First cup gold nugget, it was, and it smashed. It didn't go far down once it hit the 8, 9, 10K, and up it ran and it ran and ran and ran. And that was the exit target for the mega bull run, and you could have been leveraged long for an extended time period. Maybe just give you a little sneak peek of that beautiful history and past that you so yearn for. There she goes, there she goes. You can see it there, you can see it there, you can see it there. That's your runner. Net leverage longs, very few down day candles. Okay, let's go back to our head and shoulder that we were drawing that's now out of place. See if we can reverse him in there. So that was actually your first small head and shoulder. That had a neckline down there and gave us a 29,000 target. That is why we expected this falling wedge to hold. It was different to the previous falling wedge that you got there. That falling wedge was come from below, shoot down and squeeze, squeeze, squeeze and continue up, continuation falling wedge. This was actually a reversal falling wedge because you had the head and shoulder, you had its target bringing down there that I've taken off. We don't want too cluttered a draw. That took you through to 29, you would have got out in that wick. This was a come down into the falling wedge, zigzag, zigzag and reverse back up. So even though they were falling wedges, structurally they were different. Whence did you come and whence did you leave? Reversal, falling wedge. In other words, all that selling had to work its way out. Oh, fatigue, fatigue, fatigue. Once all the panic money was out, second surge. That went along with the NASDAQ going up very strongly, as we've highlighted, and we will do today. Bitcoin against gold, Bitcoin against the NASDAQ, amongst other things, as a cross analysis. This second high, which was 69K, is higher than the 64K, but as we've highlighted many times before, and we say again, on your NASDAQ and on gold, that was not the case. That was not the case. So Bitcoin was dominating initially, and then it was too high beta, and some of the money started retreating, preferred the tech market, the shares, preferred a little bit of haven in gold. It was coming lower. So that's a lower drop than the high over there. So that was, in fact, the first head and shoulders. Let's just put that target in. It feels naked without it. Sometimes I just look at it and go, you got to put it in even though it's going to get messy. So that was your 64 high. What was the level and the neckline for that? Just to remind everybody, it was 47.5. 47.5. Now we do a lot of volume by price analysis, and we don't believe many people do it correctly. But I don't tend to do that in these YouTubes. You can find out how and when and what we do. Understand voids, vacuums, and very high points of control or volume levels per price, and where do you throw it and how far do you extend it. How to do that when you join our community. First link, book a call in the description below. Click on the link and book a call. And you'll also see us do it for ourselves, and you'll learn and watch it. So that was that first sell-off that brought you down, and that brings you very, very closely to this level over here. It's in around the 34, which is a great confluence. And on a more geometric scale, we're in a log scale here, it actually took you to the 29,000 level. I'm going to keep it not too dominant, something like that. Maybe let's keep you spotty and make him a tiny bit bigger. So you look something like that. Okay, so that was the head and shoulder reversal that took you up into the final high. Then we had this much sizable, I would argue, broadening structure, which was already a concern in of itself. No one wanted to talk about this. We were highlighting this broadening structure, down leg into this big broaden, even though that high is higher than that high. As I pointed out, it wasn't higher on other cross comparables. Remember, dollar super weak during this period, part of your Bitcoin analysis is absolutely the fiat you are measuring it against analysis, because they are sometimes the story too. This is a pairs trading. This is why we come from a Forex background. We understand left versus right, your base currency versus your term or your currency. So you need to understand that. So let's have a look. There was also a little bit of a halfway mark. You saw it like that, flagging, 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 flagging. And this flag, of course, generated a target. And was also bearish of structure that generated a target. We've covered these ad lib. They all brought you into the cluster here. I don't want to overdraw because we're going to get messy again. That gave you both a flag on the bigger time, the smaller time frames like that, but on the bigger time frames there wasn't much candle action that stayed above. So it's more of a squeezy, Japanesey. Get it in, you good thing. Down you went, bang, down she went. Targets also to the downside. We'll talk to you about targeting on bear flags and the association of time frame with regard to bear flags and all of that. So that was kind of what was going, but this is a head and shoulders type quick recap. The other thing that came about is that you ended up with a monarch head and shoulders over here, over there like that, which then brought you down to this neckline over here. Then you ended up with another head and shoulder over there like that, where that is all your head and shoulder. That was a serious one. Look at this exit on here. Now, for people that say, but, the market still went lower. Yes, head and shoulders are macro reversals and they give good targets when drawn correctly. Most people not drawing them correctly because they use ascending and descending necklines. You will learn complex head and shoulder theory with key levels of significance necklines, and you will no longer make those same mistakes. The beautiful thing about that is it gets you out when you're likely to have a major point of pushback. And I was highlighting this to the community. 26,100 as a point there. By the way, that high over there was close to 32,600. So you were almost 32.7 from 26.1. That's 4,000 to 30 and another 2,000 to 32 plus the 700. Call it 600 minus the 100 that you're on here, 26.1. Call it 26.2. Okay, minus 200. So you would be looking at the better part of 26 to 32 on its own is 6,000 plus another $500. $6,500 rally against you if you'd exited here to there. Deeply unpleasant when you're in profit, especially let's say you only got short here by the flag. Let's say you were late. Most people were reluctant to get a bit short. People are too slow to get short when the tide changes. They're still in peak bull brain mode. They see millions coming for Bitcoin. It's going to. They bought the house they're going to own when it hits that number. They bought the car in their mind's eye. They can't accept that all that stuff has just gone poof. No. Please tell me it's going up. It's all over. It's just a passing blip, etc., etc. Just a pullback. They will carry on hanging on. That is the makeup of mental psychology and the combination of dopamine being dropped in the back from your brain. Oh yes, endorphins and dopamine don't end my lovely dreams, my gambling addiction, etc., etc., etc. I do not wish to see. So most people are late. If you got in there and you'd made that much profit, you can appreciate that a rally up to there at that point has taken 50% back of your profit. And it happened in a matter of weeks. This is a 4-day chart. It's even less than a week. So you've got 1 candle, 2 candle, 3 candle, 4, 5, 6, and you're at the high over there. Of course, it came down fairly quickly if you put the bottom lip and you ate the pain and put the knife in the hand real hard and hung on. Yeah, you might have. Most people don't hang on. They bottle it. They get out by the time they realize. They think it's over. The moon is coming back. There's still some late bulls saying, buy the dip, buy the dip, buy the dip. And of course that carries on. Then we've got 3 Arrows Capital, we then got the FTX sell-off. This is another amazing exit, but hold on, what exit is this? This one over here. So we've highlighted a couple of the exits that are in here. So there's a couple of head and shoulders we've spoken about so far. Those are target exits, key levels, and their associated necklines. You've got the smaller one, you've got that one that I've just covered with you, that gave you that exit. Well, this was a massive left shoulder with that a massive head, and that too, a massive right shoulder, complex head and shoulder. 35K neckline, so you've had a 42.5, you've had a 47.5, which came from here. You got the 42.5 that came from here on this one, and then you have the 35K. All of these are key levels. This was such a key level. The falling wedge, it split the falling wedge there, it split the falling wedge there, and it was just run as a Wix level, which is key levels of significance are normally just run HVF method rule. You will learn. Yes, sir, indeed, 35K. So that target generated a target. That would have got you out of there. What was that value? 17,725. And you went up to over 25K. So imagine again that you were late. Say you were late and you got in. Oh my God, it's going down. 3 Arrows Capital. Chase the bear news. I'll get in here. You would have run it down and got out on that head and shoulder because you were watching the market sniper video and you saw the head and shoulder target is down at 17. You said it'll never happen, and then it happened. And you closed your trade, you would have that much profit. If you sat through the rally, you would have gone back to that much profit at the worst point. That means drawdown on your profit, not drawdown in your losses. That's a different game, and most people are getting that wrong too because they don't know where to put stops. Hence why you learn Hunt Volatility Funnel Method. But anyway, that would have been an 80% take back of your profit. You would have gone from 17,000 if you'd got in roughly around here, which would have been around the 26Ks, 27K call it. You would have got in and you would have rallied all the way back to 25 from 17. That there is 3,000 to 20 plus another 5 at 8,000K rally on 17. That's almost in of itself a 50K rally. And everybody was telling us, we're wrong, it's a bottom, it's a Bitcoin bottom. And we said, do not get in the Bitcoin bear market B. It is not yet over. And you had come down really hard. Everyone was like, it's got to be over, it's got to be over. Bottom callers, bottom callers. We said rising wedge to the 25K. You'll just run the key level, shooting star, and break down. That's exactly what happened. You can go look for those legacy videos where we warned about the rising wedge on Bitcoin. Everybody, bottom call, bottom call, bottom call. You dip it down, FTX came in and kicked us all in the balls, boom, 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 and you're now running targets down here. And that target was made a second time after you would have got out on a wick. Very, very tight, by the way, almost too good. You don't want to be too good. Anyway, so that history has thrown a lot of necklines down for us that are key levels of significance that remain. So we recapped all that just to bring you up to date and bring you into flow for where we are today. So let's go into the daily. Now you know why some of these lines and levels exist in this whole game. Let's get it through, let's get it through. So you're looking at key round numbers that were necklines. So this is a channel. It's not an aggressive, an extremely aggressive channel, but it includes a bottoming, and it includes, more importantly, the break of an inverted head and shoulder. So just to recap this, you are essentially sitting in any number of choices of head and shoulder that did break, including a super macro one like this to the downside, all done and finished there, with a similarly large head and shoulder bookmarking the end of the bear market. You literally have head and shoulder bookmarks. A bearish one that ended the bull, a bullish inverted that ends the bear. They sit right there, and this beautiful head is in the middle. The narrative of the bear market. Who was riding with you the whole way through and keeping you out and being net bear? But now people became so negative that every bottom killed everybody, etc. There was so much bad news that they now, people that are still bear now and think it's still not over. And we're here to say, in our opinion, on balance of probabilities, this is over. So we go back to the downside now that we've covered the head and shoulders bookmarking aspect, and we go back to that daily and we talk about the shorter time frames. So that stop is the point at which we say we're wrong, it's not a reversal, there's more downside to happen. So you know there is a level that we accept. You've got to have a level that you accept that you're wrong. Our level for being wrong is that level you see right there, around about 19 19,500, I would say 19,600. It must run that low in the event of that. And it's possible. You cannot say it's absolutely not possible. If we had a really strong demand-destroying event, Bitcoin could react unfavorably. It doesn't have to, by the way, because we've seen gold and certain things in quite bad environment. We had a banking crisis with smaller banks. That maybe wasn't big enough. Actually, Bitcoin went up on that news. But it also depends on how far and how strong the dollar gets. More on that in a minute. So here's that legacy target of 26,171. You see why these levels remain interesting. That falling wedge kisses, double bottom over there. No more further pursuance beyond that. Lower volatility. When you start lowering your volatility, this is where you're getting near to the end. And of course, our three impulse, upside HVF, which saw upside HVF, falling wedge. Let me restate. It's a falling wedge which points to an upside breakout, which has now, in our opinion, occurred. So there's your falling wedge. There's those interactions with that key level of significance. It did not. We thought we allowed room. It could revisit 25. So far, it doesn't seem like it needs to. So far, that doesn't mean it won't. If we get a significant enough wobble. You need to view this whole hop onto the ledge, this descending, basing, descending grind line, this entire hop onto the ledge, basing, descending grind line over here into that, like that. As your one, you need to have a look at this as your two, and then your very low volatility up to your splitter, that's the one in the middle, this very lightly drawn line so it doesn't over-invade, as your partway three, and then drifting candles. That is a funneling behavior. You get that in actual hunt volatility funnel setups. They are not falling wedges, they are symmetrical instead of falling or rising, and they get real spinning tops of suppressed low volatility. And what do? You get an upside break after that. Oh, nothing too fantastic. This isn't writing home about it. This isn't losing our minds. This isn't, yay, mega bull to the moon, to the moon. This is just a clear technical move off the lows. There is another reframing for this, by the way, and I think they both endorse each other, as I was highlighting for our community when we were doing the updates. Let's take that last line off. You can also draw it very similarly to that and say, in essence, you have had a bit of a bear flag. On the flag variety, you haven't yet broken, you've revisited the other side, and you're softening a bit. A return move to the falling wedge line, you see the dotted falling wedge line. I'm showing you two things at once here. Maybe I should drop time frame, how about that? Let the guys see properly. And then you can appreciate multiple particular patterns of reference, and they both tend to support and endorse each other. So if we look at the 8 hour here, whether you draw it as the falling wedge that it is, or you draw it as a possible flag, like that, half move, bouncing around our splitter, super low vol. This is actually generally bullish, as I mentioned. Final spill doesn't make a new low. Upward drift, low vol, pop. So you could still be in that structure. We'll look for this capping, descending grind line to break as part and parcel. And you could get a return move that could achieve a number of objectives. It could return move to the falling wedge draw. So let's draw that in the blue again because you've lost sight of it. You get a return move with a spill, and you've also got a much larger channel basing ascending grind line, so you could get a bounce here where you hold this basing ascending grind line and you come back up and you break there. Or you could just go straight from here. Doesn't have to, nothing has to, but it wouldn't surprise me. I wouldn't do it too scared by a return move to the falling wedges key level and kissing the basing ascending grind line, etc., and a revisit, as I say, to the falling wedge line. So there's a couple of framings there, but overall this is a contractory period that points to continuation. So we've spoken a lot about all the different head and shoulders. I've drawn you about 3 or 4 different head and shoulders on the way down into the bear market with your first warning on the 64K that took you to the low 30s. Then the multitude of nestled head and shoulders, starting with a monarch, a bigger, and a bigger still, that all have had targets perform and gave you incredible exits. Yes, and I've highlighted the exact same structure as a reversal on the way back, bookending the bear market. Now we are in continuation times on balance of probabilities. Not absolutely, but on balance of probabilities. This wasn't extremely violent as well. It bounced and kissed a couple of times the key levels that we've highlighted over here that were legacy key levels. Just run and stuck. Let's do it fat cokey. Fat cokey draws. We love a good fat cokey draws. That's how your kids draw. Big and fat, lettered large. So something like that. And we continue to expect some degree of holding above this basing ascending wine line, even with the return move. So on balance of probabilities, you're in the lower end of the channel, and there's likely to be a bit of upside drift. This ties in a little bit with gold, because we actually see gold to have a little bit of upside performance against the euro, particularly more so than gold, but we think it's going to start heading back up. It's also bounced on a pullback after triggering a number of key levels. Anti-fiats are macro bulls. Do not short them, even on short time frames. Look how frustrating this would have been as a short for you. You would have thought you were in the money, then you would have got violent rallies all the way. Even though it's gone down, you've had 3 impulses of rally. 1, 2, and then from these lows, a flat and calmer 3, and now you're going back up. That's not comfortable shorting. You want to short in capitulations. That's the bear market. That's gone. That's gone in our opinion. This is now how you play. Grinding upwards occasionally, strongly upwards, and then contractions that are typically continuation periods. So what has the dollar done during these periods before we go too deep into the Bitcoin weeds? In fact, we'll go to the dollar later. Let's go deep into the Bitcoin weeds. Who wants weeds? Ooh, all those that are wanting weeds, put their name down. By the way, I don't even drink coffee. The energy is natural. I get some people saying some interesting things there. So I'm definitely not a guy for weed. And I've quit all forms of alcohol, even though I was very light. So I'm pretty proud. I'm going to gloat. Anyway, you don't want to hear about that. You want to hear about Bitcoin versus the NASDAQ. So let's take you there. Let's take you there. Let's go back to the daily and the weekly structure. Again, there's your first cup gold nugget break against the NASDAQ. So we are dividing by IXIC. We are dividing by IXIC. Yes, IX and IC. That is, for me, whoops, that's a bit too fat a cookie. Let's take the crayon down a bit there, and something like that. So you are in a channel break, and you have again had 3 very bloated second impulse, very typical long basing periods, starting to get lower vol, but a final capitulation bought by FTX, very low vol, squeezy, super tight, pop, pull back, that of course the right shoulder against the dollar, up and down. So actually, since this point over here, which was round about mid-October, Bitcoin is an outperformer generally, not every day, not every week, not every month, but generally. So most weeks it's gone from higher in relative value, it's gone from there to there in terms of its relative performance to the tech market. So if you'd got in Bitcoin and stayed out of the NASDAQ, you would have outperformed most people. Unless, of course, you had the AI king of NVIDIA. So that is how much difference you would have performed to the NASDAQ. And that is, again, a breakout event there. Impulsive, you'll note it, impulsive in there. As you break, again, the descending. Could we redraw this as a flag? You could, but there's only really 2 points. That one, those 2 are clustered so close together, and that one. So it's not a strong line, I would argue. It's not particularly strong, could be flag-like, possibly, again. But I prefer the falling wedge. I like also the compliance to the splitter. That is the value you get by having splitters pulling up to here, grinding up to here, being smacked down. These are what we call halfway across moves, getting to the midpoint in the falling wedge, which is very typical. This was ground floor, bouncing around the ground floor and skidding lower until it changed. And that's what we're saying. This channel for now represents change. You are making higher highs and higher lows. Simple Dow theory. So for those that say it's still in a bear market, at what point and at what time frame when you're making higher highs and higher lows, do they acknowledge these higher highs and higher lows and recognize that fact? I don't know. You've got to ask them. You've got to ask them that are bearish as to when higher highs and higher lows. They've got to have a level. But that is Bitcoin versus the NASDAQ. We've also got Bitcoin versus gold, which has been reasonably strong, as you know. And I also mentioned gold versus the euro as well within that. So let's check it out with Bitcoin versus gold. A harsher, steeper across the tops, capping, descending, grind line for our falling wedge that existed there. And there's your basic, I would say even more beautiful and clear cut. Multiple points of interaction across here and even there. Beautiful basing ascending grind line with minor gradients that set up the final spill. Look at that volatility squeeze. Super squeezy that Japanesey. Ouch, ouch, ow. Testicular bandolas are flattened. There you go. Bang, bang, bang. Up you go. You could be in some form of a broadening structure now. So you could square up and slow down a little bit. So you could go up, and down, and up. It's a bit that kind of a market, as I say. It's not about to be a super moon. It's still just a reversal bull clawing its way up, more up than down, no fireworks. And having regular pause to let out any super hype. There's just no mega FOMO right now. There is no pumpermentals right now. There have been two reasonably big candles there, and possibly both those two added together particularly. But other than that, when you look at the weeks, that's 2 weeks out of a long old period. So squaring up, sidelining it, and then pop goes the weasel, maybe getting a couple of these targets could imply that Bitcoin's doing rather well. Heading for that 40,000 target that we gave you on BTC USD. Did we reiterate the target for you? It's not tomorrow. It's not next week. It's probably not next month. But there is a 40,675 target for you. But there will probably be a number of ups and a number of downs in that. You could even square up, as I've mentioned on the gold, and come out of this gradient along the base. That's still fairly steep. You could go uppity, up, and then rest and come down through it, rest, and that's typically called squaring up. Squaring up, in other words, the algo buying along the lows, here, then here, and then here, suddenly finds that it needs more time, and it needs to wind up to gain more momentum before that can occur, and you run your target. Okay, now targets were very accurate on the downside. You didn't push for it much lower. These were great exits, and you escaped major rallies subsequently. So that's the other key thing. Deeply emotional pullbacks against your profits, not pleasant. Even drawdowns against profits are unpleasant. Drawdowns against non-profits into losses are deeply unpleasant. So you could get, I wouldn't hold for much longer than the 46.49, because you're going to get into the key structural area of that flag. Remember, this is Bitcoin dollar here, but there was really high volume here, and there were a lot of key neckline levels. A lot of key neckline levels. That's why I think we might run this 35 and pull back afterwards and come back a wee bit before we go. And then you're going to have some heavy traffic. So short bit of volume by price. Short bit of volume by price. We've got a lot to teach you on volume by price, but that only happens in the area where we teach, which is our special community. So I will just, without explaining, put our volume by price on, and you will not know why it is put where it is put. But if you want to learn, you can. So in the Bitstamp, which is not necessarily reflected of all markets, you can do it on BTC without the USD to capture market cap. I just want the dollar values. I don't want the trillion, whatever. but this will show you. And the amazing thing about our neckline is it's absolutely in a void and vacuum of volume. Look at that plungementals on the overall back. It spilt its guts straight through it, very little trade. As it got up there, very little trade and was knocked back down. As it got up there, very little trade got knocked back down and then pumps through it. That is how key levels are taken, with momentum, and you shoot through. A real void and vacuum in the volume by price for this run-up, reversal and down leg stage. So it's really interesting. Now we are above that into thicker traffic, and we sit back and we rest in support roughly along these levels. Okay, that's all I'm going to give you on volume by price. You can, as I say, click the link and you can see more of what we do in that space in terms of understanding the key levels of significance and voids and vacuums and thick points of control in terms of volume. It's very, very interesting. So Bitcoin is a recovery bull building, slowly building, and it can go sideways for a while. I don't think it's going to be super exciting. You want to bias net long, but there's a better token. There's a better token. So let's start with one that is better, and there's a few that are better, and we're going to work them up. We've said to you repeatedly that ETH is a better performing token right now for us. I'm going to try find the chart with the least noise. Let's go with that one, and we'll start without any eyes. So you also had a head and shoulder, by the way, in Ethereum. This is working its way up. What you will notice with Ethereum, again, we started on quite a big time frame. It's a weekly, and that's the right thing to do. There, of course, was your collapse March 2020 events. Then the printathon, dollar weakness, surge, surge, surge. You went up from $79 and you tapped out at a high of 4,868. There you go. So, was it 79? What was it? Low 86. 86 to 4,800. 86. So you weren't even $100 and you went up to 4.8. So that is a 48x, guys. Just so that you know, if you'd had the courage to buy Ethereum at the darkest hour, I would say, with everything being liquidated, you would have done exceedingly well. Well, we're here to tell you that XRP will probably do a 33x. And we'll explain why that number. No, it's not. We're not trying to be cute, and we're not Freemasons. And we will also tell you that there's one you're missing that potentially could do more. There's a slight threat in this, but I actually think with the low volatility that's going on, that this is more likely to walk its way out to the upside. So the bear markets and the bear season for us is broadly over. Does it mean ETH is a moon bull? Not really. It reached to get through the technical 2000, which was a key level. So let's just pull this whole history a little bit more into perspective now. And we can maybe drop time frame down to the daily. You can see here that it's an even firmer resistance to downside. There was arguably a better case for a falling wedge here. You see it right there. And you could see the squaring up, as we refer to it, failure to make new lows after a final capitulation low on your second impulse. First impulse, second impulse, so much learning, super squeezy. Then you go up, test, back in range, walk, 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 break. That is a falling wedge break to the upside, guys. This is not typical conduct of bear markets. This is after a run up from 1370 to over 2000, and you've had a pullback and you've broken to the upside. That is continuation price behavior out of a falling wedge, which is a moderated pullback where there is clear signs of dip buying. That is why it is not a bear market anymore. These are the kinds of pullbacks you have when you're in a bull market, not the kinds of pullback. And then holding a level, people were buying all day long, in and around. Every time it traded lower than 1800, somebody's doing some buying, somebody with a deep wallet, because the scared retail money is all long gone and there's nothing much more to sell, and it's being bought up at 1799 or 1795 at anything trading under 1800 for a sustained period. That's what the market is telling you, friends. That is not a bear market performance. For most of May, you're sitting there with accumulators accumulating below the 1800 mark. And what do you get? Falling wedge breakout, small little candles to follow, etc., etc. Was a capping grind line a bit across the top there? Yes, yes, yes. And so you did blow out the top when it got a bit momentum. So look at the blue now, less than the pink. And you pull back, and now you've gone into a falling wedge. So rising wedge into falling wedge. We refer to this as cascading wedges, where you're getting bull, bigger rising wedge, eventual little bit of mania and blow off. That's in the orange now. I'll draw it in orange because we're going color mad here. Uppity, uppity, up, blow off, and pull back down. A little bit too much too soon. This is staircasing your way up. Falling wedge sets up the new move that could end up setting another rising wedge going higher. So this is bullish price behavior for the time frame under review daily. What about, you ask? What about ETH BTC? So we've continued to say to you that Ethereum is likely to outperform Bitcoin now for a bit. But hold on, what's Bitcoin doing on the dominance front? What's ETH doing on the dominance front? We need to look at that, and we will. So let's just finish with this ETH analysis. Again, up legs, high momentum. Topping out, grinding, complexity, zigging and zagging to the downside. There was a capitulation here. That can't be ignored. And then there was, again, up legs, very high momentum. Down legs, three impulses of a down. Up one, complex two, lots of stays, minor capitulation inside the two, taking you to the bottom side. There's your falling wedge, lower volatility, one little pop to test, and coming back down, drifting, funneling, squeezy, squeezy, Japanesey, up and up to the capping, descending grind line that it is now working its way through. So this is the finishing of a second impulse where that is one and that is two, and I don't think you're running that low. I think you're starting your third, where you will go for a third and then essentially move extensively higher for Ethereum against BTC. But wait, you say, what about Bitcoin dominance? Isn't Bitcoin dominance? Didn't you say last time Bitcoin dominance is doing okay and likely to go higher? Yes, he did. And so let's look at Bitcoin dominance again. So what do we have here? Well, we need to bring in the secret eye. There he goes, bring him back in. We've got a little bit of a structure that suggests it is possible that we go through 50%. A little bit. We don't know for sure. It could also top out here. We don't want to come on too strong about this, but there might be a scenario where you have something like that. That's not so easy to see. Let's go back to our TG pink. Fat Koki draw like that. Bang, 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 bang. You see him? That could squeeze to the upside. Had a nice little surge, getting a little bit of pullback. This is in and around your 48%. Remember, we told you about these even here and before the flag. Again, that Bitcoin was going to gain domination and get to legacy levels that it achieved before. Remember us telling you about all of these Bitcoin dominance legacy levels. There she goes, here she goes, here she goes. Now, instead of just touching and collapsing, touching, collapsing, touching, collapsing, we've got more hang time. And it might even be a squeeze between the 47.5 and the legacy highs of 48.18, which were targets that were achieved on the downside over here, down, down, down during the Bitcoin dominance phase. Now, we could squeeze higher. But then who's going to give up market cap value if the next biggest token is beating Bitcoin? Ethereum. So, good question, because for Bitcoin dominance to go up, and we think it will go gradually and by a degree, someone has to be losing. So, who's losing? Well, first of all, if we're grinding up 1.64%, no, that's Polkadot, sorry, 1.61 on Bitcoin, and Ethereum 3, who's losing? Well, all your stable coins that became super dominant during the bear market, because everybody went to hide in dollars. They got sick and tired of money go down. So they bought stable coins. You have Tether at number 3, the third biggest token, 83 billion is Tether. Then you get USDC as number 5. These are doing zeros when everybody else is going up. You've got Binance a bit flat and a bit sickly as well, behaving like a stable coin. So Bitcoin's 2.4 and Ethereum's 3 represent overperformance over number 3, 4, 5. We will come back to number 6, which is XRP. Yes, and that great performance at the moment. But even Cardano is underperforming Bitcoin. Just tick 2, Bitcoin's 2.4. And then Doggy, of course, is as sick as he deserves to be as a meme coin. And you have to go to Matic, which is only just caught up with Bitcoin. It's only now 255. Actually, Bitcoin was ahead of it most of this time. Now it's the same. Solana, as an exception again, also high. We've got Tron that's down. Litecoin that isn't doing what Bitcoin's doing. Polkadot isn't doing what Bitcoin's doing. And then another stable coin, Binance, it's fallen off some way. BUSD at number 14. So stable coins are giving up market cap dominance. And most of the other tokens, and I think when you get to the medium-sized and the slightly crap coins, you're going to get lots of garbage numbers. So True USD, another stable coin, Internet Computer down 3.5%, Bitcoin Cash down 8.8%, almost a full percent. Tomcoin, we're between the 30s and the 20s, down. We'll speak about Lumen. It's one of our status chosen one. Ethereum Classic, down. Even Monero, still underperforming and slipping compared to Bitcoin. So these are all down. These are all down. If Bitcoin's 2.4, most tokens, apart from File and Lido here, are actually underperforming it. So every day, medium and medium small are shedding value, chasing into the aggregate small token, micro cap, medium cap is not the time. This is a time of potentially the dot-com boom, when all the dot-com bubbles, pet.com and boo.com's in the mix, all are about to go bust and lose their relevance, and the chosen ones are going to come to the top. The cream, they will tell you, only they are chosen rather than cream, but that's a different story. So watch out for this. So the big tokens are where the action. This is why we've always spent time there. There's plenty of liquidity. We don't like to see traders get wrecked on things that have no liquidity. We've never punted a very small coin and taken positions either with or against you, which many YouTubers have had. So we don't encourage you to trade outside of the liquidity. Generally, we aren't trading very often, and we trade position. We are not jumping in 5 minutes in and out. We are not day trading. We go and we leave our stops and our targets in, and we swim in the sea. We live life. We don't lose our eyes to screens. So with all that philosophy said and done, that is why Bitcoin could go up and still give up ground to Ethereum, because it's broadly gaining on aggregate more than the rest of the market on aggregate, apart from some select status coins which are smaller of market cap and going higher. So with that explained, we can continue with our Ethereum analysis and our FBTC. So we see FBTC going higher. We have also showed you the F dominance and said this squeeze is an upside break. Let's just put that on a 3-day and we get a little bit more space to highlight this. And we see 23% coming in due course for dominance for Ethereum. Don't forget, you've had a long time at 18.5, 18.7 that you could be accumulating it, and a 3.29 doesn't sound like a lot, but in actual fact, it's a sixth of 18%. To do another 3 plus, in fact, it's 5. If you got at 18.79, you're going to get about 5 in a bit, going on 6%, which is around a third if you get 6%. That's not a sixth, it's a third. In terms of relative overperformance to the rest of crypto. Some of the stable coins will be flat, the crappier coins will be down, and Bitcoin will be moderately up. And you will outperform all 3 of those with your Ethereum trade to the upside, to the 23.34%. So number 1, that's not too bad in of itself. In due course, actually, we've got possible outcomes that rely on Ethereum continue to comply. So as it gets deeper in, that it may indeed go quite a bit further, through to 34%, 0.4, and even beyond. And some of you will be going, that will never happen. What about gas fees? What about this? All the fundamental stories. Just so that everybody knows, you've already seen once before 31% at its absolute highest of ETH dominance. So never say never. Never say never, my good friends. Never say never. Okay. Anyway, so that's Ethereum better than Bitcoin. So we're slowly structuring things for you so that you understand how your investment portfolio without leverage should see you net accumulate. Now we come to our status friends, and with particular reference to XRP. Now, this fella is in a different category. So I'm going to highlight its history since it was listed around about 2014. I remember being at the stand and they just had kind of hot girls and no one understood anything about crypto. While in the other places, when I went to other places, they had all the techo geeks very excited to talk about their tokens. So I was just like, yeah, you guys aren't so big on wanting to talk about the tech now, are you? But I'm sure that was just a, who knows, a consensus thing for the moment. Because we have very interesting people in our community that have insights as to, let's be clear, central bank digital currencies are coming, friends, whether you realize that or not. And the status tokens are going to help them bring their solution that will be brought to bear on you. And they don't care about you. They will bring it regardless. They are going to bring it on you regardless. And there are companies that are positioned to serve government. They don't care about the consumer either. They're going to help the government get its goals because that way they curry favor with government, ensure their existence, and get paid by government. And guess what? Government is currently the biggest expender right now out there. You look at AI, who's spending the most money on it? They are running databases on you. Military-industrial complex through the roof. Who spends that money? Government. They are taxing more, taking more, hiring more because they are crowding out the private consumer, which is all part of the game of being global Bolshevik communism. Okay, so now we understand that simple point. Government expenditure matters and how they will, and central bank digital currencies, as much as central bankers would like to think they aren't normal government, they are just paid from taxpayers' largesse. So this beautiful structure to the upside gave you that target. It turned into a great resting point. You came and visited it after you ran up there. What is that blue line? It is the magic 1, which was the value of Ripple, $1 at one point, and its absolute high, if we were to capture that high point, its absolute high occurred in the week that ended 1st January and caught you at $3.31. Now, I must make it absolutely clear that this is a log-scale chart. This is a log-scale chart. That's why the $3 looks not much higher than the $1. If you would just like to understand how that really looks, you need to have a look at a chart like that. And now you can see exactly this structure. You literally can't even perceive with what's gone on now. So this is the rule of crypto, and this is the rule of dealing and making sense out of hyper-parabolic moves. You have to use long scale on the bigger time frames. And this is what we've done here. So that would have been your structure, that would have been your trade. You could have been long anywhere in the funnel here. There would have been 1/3 of a cent. You would have got long sub 1 cent, still 0.009. And before you realize that, you would have been already at 16 cents over there. So that's a 16x in of itself. You would have got a lot higher on that secondary surge that occurred with a blow-off into the December, January end of bull market. As a result, this was a long, painful bear. Now, the key point to recognize here is that because of probably the legal suit and a couple of other things, XRP did not actually get an opportunity to make a new high. Bitcoin turned 69 there after a 20K there. You will notice that this particular token completely missed the secondary bull. It went up and it went back down and it never made a new high. So its performance there was sub $2. Let's check that exact secondary high, get a number there. 196 is some way off the original 3.31. You didn't clear $2, you were $3.30 in 2018. This, however, does give it a unique advantage. And it's funny how these things are geometric and they work out. It makes it a candidate for a volatility funnel macro setup to the upside. And that is very, very powerful. And this is where our number comes in. Were you to have been a buyer when we were talking about this on the super low vol, tiny bodies over here, in and around 40s cents, we told you you will go to 16.77. Let's say you aggregated at 50 cent average entry, you're now 52. So your chance to buy at 50 cents is possibly over. And you went to $16.77. So that's 16 and a half. Don't forget. So 50 to 16 and a half is how we get to the 33. If it was just $16, it would have been 32, but it's 33. And there is a bit of an overrun to 77, so there's a quarter of a cent there as well. But now if you're buying at 52, you will need that quarter of a cent just to get your 33x. So it is our opinion that you are in a basing phase here at your relative low 2. That is not dissimilar to this period here. And they even look somewhat similar, the volatility slightly upward leaning, low volatility, bumps, etc. That period is there and you are here now. The next move will probably get you through 72. You may have a rest back down. That will bring you to your final chance for XRP accumulation before, wait for it, a potential $16 run. Now imagine you bought that with an average price of 50 cents and you made 33 times your money. How much money would you put in to start off with? Well, you don't know for sure that that's going to happen, and I can't guarantee you that. But it's my expressed opinion that the odds are good, that the possibility is there. It won't happen overnight. You will have a second interim to make. You'll even have a first interim to make. You'll come back down, and then you'll have a breakout. You'll get back above 1. There'll be mania. There'll be FUD. There'll be pullbacks. There'll be some volatility. But wouldn't that just be grand? And many of you will remember and come back to thank me. Many of you will already pay your way to the community for a pittance of XRP, which will now be greatly far further value. And when you come in, you will find that this is not even the greatest of them all. Not even. And I'm not referring to Lumen, who will do a decent number too. Roughly similar. Of course, there's some history. Some of you will already know the details, in many cases better than me, about an exiting partner with regards to Lumen. So let's just show you Lumen. It's not the one I'm referring to. Also to do well, but I think it will lag. I think XRP goes a little bit first. But when Lumen does go and plays catch-up, it could play serious catch-up. But it seems a tiny bit behind. That's not the one we want. Let's take that one. That's also kind of not the one we want. That's the one we want. And we go back to 2 weeks. So it has a similar structure. That, of course, is a brain fart of a wick that should be utterly and entirely ignored. Good data, bad data, etc. But you have a similar structure over here. Again, a little bit earlier in its stage of recovery, but giving an immense, and we discuss this in more detail in the community if you want to find out more. And I think you'll get a little more than 33, but it looks like it will break later. And as a result, we prefer the first mover. The first mover is often the best, and XRP is already performing. But do you chase? No, we don't suggest chasing. We wait for the negative days. They will come. There might be some news at some point on the legals. Don't try play that. Buy it on the down days. Dollar cost average. Put money aside, and every now and then, every day that it's down, buy a little more. Every day that it's down, buy a little more. Avoid chasing the green days on it's missing out. There's many times you think you're missing out, and there's many times it'll come back down again. And that's why the other token that is actually currently coming back a little bit is a great accumulate and is a 60x. You can have a guess below who you think it is. And remember, we don't do anything that's outside of the top 30 at all. And in fact, most of the time, we're rarely outside of the top 15 or 10. And it will be and is looking a little more ahead of the game than both Lumen and XRP. You can find out more about that on our live trading day on the link below and pinned at the very first comment below. You can also join our community by hitting the link below. So that was your update on the tokens you should be accumulating. To quickly summarize, BTC is in a bull market reversal, but a very staid, calm, lots of sideways, may need to square up, potential for dollar strength. We did say we'd say something on the dollar, so let me just transition quickly because I hate to say something and not deliver on it. The dollar, we have had a little bit of a turning in the dollar. We'll use the Dixie maybe to give you the first look on that in terms of currencies. That of course includes the euro, which has been kind of a bit strong. The dollar's gone from those low 100s into a bit of a rally period. Don't forget, we gave you the 110 going for 111 Dixie target. Long ago, we called this reversal here. Think about us calling a reversal in Bitcoin, where we are. You are roughly here in Bitcoin reversal parlays. Just breaking. You've just broken the neckline, had a bit of a pullback, bit of churn. Everybody's going, it's not going up very fast. That's what stands to come. Target made. Then we had the substantial pullback. It's my express opinion that you're getting a bit of dollar bid now. It's not an easy game to be short the dollar anymore. We think the yen macro is your weakest currency, but at the moment it's going to have a little bit of a counter trend rally as well. So you've got to understand across what time frame, macro yen weak, we actually see possibly potential for dollar to have a final spurt of strength on an interest rate spike that will be there to throw you out of your housing, make your houses unaffordable, my dear Americans. That is the nanothermite of your personal finances controlled demolition, and you need to be aware of that. So if you have a look at the Euro USD, we said over here that this was likely a rejection. In fact, that work is still there. We said it as it was falling, that you're likely to have a bit of a rejection. I think you're going to skid a little bit lower. You're going to get a bit of a rally back up to this 110, then you're going to skid a bit lower down into this range. So that's going to generally mean broadly moderate dollar on and off strength. So more strong than not, but again, no fundamentals, which kind of counter matches the fact that Bitcoin isn't going to be super sexy itself. It could square up, etc. But you know Ethereum is going to be better. But you also know XRP, given enough time, could be exceedingly good. So you should be, by strategy, contemplating the idea of dollar cost averaging into XRP, having a holding of Ethereum and dollar cost averaging into XRP as a token, and continuing to buy on the bearish days, accumulating funds, buy on the down days. Buy on the down days. Show that you have discipline. Show that you are not a pump chaser. Buy on the down days, and you should be booking a call on the description below, first link, to find out what the 60x is, because 60 still beats 33. Oh yes, indeed. That takes you from 500,000 to 1 million. Maybe you'd prefer to be a millionaire, then halfway there. I don't know. Maybe it's just me. Maybe you'd prefer 10 instead of 5. Maybe you'd prefer 10 grand instead of 5 grand. Who knows where you are on the scale? It's all there to be taken. You can find out more. There will also be a live trading link, also in the details below and in the pinned comments, for you to join us for our live trading day this Friday, when we look at the non-farm payroll in the traditional markets and crypto markets specifically as that data comes in. Until next time, I wish you well. Be safe, trade small, trade smart, trade HVF.